What a great time to be talking to Bad Charts One, Patrick Karim. Patrick, I missed you last time. Blake talked to you. I'm glad
Oh
I'm
yeah,
here.
good to see you,
And
Patrick, and
yeah,
you guys have a good
yeah,
interview.
Yes.
yeah. So these are the days that you've been projecting for many years. You and North Star guys were before the secular change of money flows shifting out of equities into gold, and you showed breakdowns when the ratio was changing, and that was ahead of the crash. Nice work.
Yeah, well, yeah. So, like we know in hindsight, that was something important. But indeed, the gold versus SPX ratio and all these U.S. equities, all the indices, all the sectors in the SPX, they're all in bear markets, pricing gold. But what's really important is the actual fiat denominated. So you could get clues when you start pricing an asset in another denominator other
Currency.
than fiat. Start getting clues where the macro cycles are heading, but you still need a real bear market in U.S. equities, multiple recessions, or to really instigate a proper capital rotation in to generate a truer, longer lasting, higher probability new trend in favor of gold, silver, whatever, oil, uranium. Insert your favorite commodity. Maybe
Well,
I'll.
the dollar's been trying to assist in having that narrative be fulfilled.
Yes, the US dollar. We could definitely cover that. I want to. I don't mind. Often, I'm always on the higher time frames there, but I want to show maybe the people watching there the breakdown on the SPX there, how it happened. Pretty much, we had like this rising trend line daily chart, guys. So on the monthly, this SPX is still above, rising trend line. It's on the higher time frame. The SPX hasn't really broken down any meaningful uptrend, but it always starts. I like saying this. It's all all tops start with a shorter term correction that looks bullish but fails to resume upwards, and then it just cascades, right? And that's how traders get trapped into being investors, and then I'm in it for the long haul, right? Because they're there to trade to make a fast buck. Then there's a consolidation pattern. Let's say here, right before, like one touch here, two touch here, three touch here, and now it's going sideways, and it's starting to enter a correction. There's some rising trend lines it's losing, and then you say, I hope it's going to resolve upwards, so I'll stick around. But then it breaks, and then say, it's going to bounce on this support, right? You're always looking for the support, but you should be looking at the resistance, and
Yeah,
then
so
you're
that's history, and this is also historical. It's the first time a 10% correction
oh
didn't
goodness.
hold, did not work buying that 10% correction.
But you're getting, look, the market's really trying right now to bounce because you have all these high volumes events at these bottoms, at these bounces. But you see here, you had a whole bunch of volume here before this appeared into existence. They're back in the first bounce here at 5,500, huge volume. And some people say, okay, that's it, that's the bottom, huge volume on a bounce. But what happens is when the headwinds, there's more headwinds and tailwinds. Those bounces, yes, you get a bounce, but are you going to create a new high? Are you going to break out above previous support term resistance to create a new low risk entry, a new uptrend resumption? And well, you don't always have it, but look at the crazy volume that came in on this huge move down there. So again, this is a bounce. Will this be the bounce that leads to the a new continuation bull market for SPX? Man, we're so far away from that because now you have to at least climb above that 36-day moving average. You have to get back above 5,500. You have to get back above 5,800. Like this could just be a big topping pattern or sideways move, and you just don't want to be stuck in there. You don't want to be hero, say, "Oh, I bought at 4,800." In hindsight, yeah, okay, maybe if this resumes upwards, okay, great, but this could just be,
Well,
this.
look how long I thought we would have a two-way conversation. Look how long it took to distribute
Yes,
on
here.
top before the break.
Yes.
So don't we have to go through a reaccumulation phase before we even start talking about meaningful rallies?
Yeah.
I don't think we're going to get a spike low and just a V bottom out of here.
Well,
There's credit spreads have blown out. It's all the other breaks that we've had along your trend line, Patrick. Credit spreads remained tight, and that's why they always recovered. But the way they blew out this time and dramatically, and again only in 2 weeks, says there's something else going on, like fear of a credit event that the people that piled into junk bonds to get a higher yield didn't learn the lesson. Higher the yield, higher the risk. And if you look at junk now, it looks pretty lousy. It's HYG. Um, so that's where we could
Richard.
have a problem.
Yes. Well,
I mean,
those the yields, they're not those 2-year yields that keep going down there. They're bouncing now, but they're still below. They're downtrending the 2-year yields. The Fed
mhm.
tracks like a 36 moving average of that. Um, yeah, yeah. Yeah, that looks like a break here.
Okay.
Also, there. I haven't
Well,
checked.
we do have an attendee that says yes, new all-time high will be coming from here.
Well, okay. Well, look, what's the advantage? I know people say that, and they say there will be a crash, but melt up first. I keep hearing that all the time. It's like you're on both sides of the fence. Look,
Oh
in
yeah,
hindsight, you could have let's say there is a melt up. I'm always going to respect the chart. If there's always exuberance, if something happens, that. But until I'll go back to this chart here, guys. Until I cross my levels here, my 5,500, which is previous support and resistance. And then there's even more here. Remember, this is like, it's resistance, guys. People who got trapped here, what do you think they're going to do on the way up? I'm going to wait for the rally to sell because I want to break even, right? So that's baked in resistance. For me, I'm not even going to think about new all-time highs until I get back above. Goodness, guys, at least a
55.
36-day moving average. Why call it so in hindsight, yes, maybe that was the dip, but why call it now when you don't have the
You have no
evidence?
confirmation
Yes,
about
yes, they are
anything.
basic premise of chart trading. It's like because all these guys
All
calling,
you have is support held. That's it. That's what you're
yeah,
working off of right now.
it's
So if you
can,
want to play that, you're wrong under 4,800.
that's right. And I'll show you the example. Here's the 2008 one. I want to show people how it played out from 2007. Here was from 1500. I should have put the 1500 to what 1400. A huge break of a rising trend line on the daily chart for SPX. Crazy rally, new all-time highs. Then it broke. Then a rally up. Oh, did not do a new high. Then it broke. Then after that, it went sideways and up for a while. No new time highs. No new highs. So now lower highs, what do you get, guys? Lower highs and lower
Yeah.
lows. You get a downtrend. And eventually down. Everybody look at these volume peaks, just like the exercise I did on the other chart. Every one of these, people say, oh, that's it, that's the bottom forever, the new all-time highs, new bull run. But all of these volume peaks just means it's like a localized low, sideways. And look at that low, lower high, and then it just vomited. Oh, even more volume here. Look at that crazy volume. That could be like the volume we're having today, Dell. And then people think this is the bottom here that's going to shoot up.
Right.
But look what
And then we
happened.
go through a grinding bear
Yeah.
market for another 3, 4 months,
So yeah, so people got to remember
5 months.
this 2007-8 one. People always think this is the vomit. But the true vomit comes at the end, and there's no
Yeah.
proof right now. That's a 36-day moving average, just like on the other chart. There's no proof right now. There's no evidence that where it's off to the races. It could happen. I don't like whatever. It could happen, but to say it's sure to happen now, I don't know. It's just a little early there just to say that, guys. It's
So, I don't know if you heard Gunlich, but he's talked about deleveraging, and there's still plenty to deleverage, isn't there, Patrick? I mean, you can't deleverage all these positions that were based upon QE, etc. Um, you know, and before all the upset came with changing the system, that I remember talking about that U.S. households had owned a record amount of stocks at the end of last year. So, wouldn't you think it's a market like that would take longer than a few weeks to deleverage?
Ah, well, exactly. If it's a true, like somebody mentioned to me, I'm not a fundamentals guy, but one of our members, he said Tesla had a price to earnings ratio. I don't know, I remember over 100, 200. It was, it was like,
Yeah.
and then in my head, whenever I hear the fundamental guys, usually isn't it like a 30 to 1, I don't know what's the average there, but then I said that number seems just bonkers, right?
Yeah, and yeah, you and I were kind of warning people about NVIDIA going
Ah,
back to
true. I remember
last
that.
year. Last year.
What does that look like? Goodness. Yeah, it's starting to it lost momentum. Yeah, right here, guys. So Nvidia, I think it was
It
back here.
doesn't look it doesn't look terrible, but
Well, it's
doesn't
in
look
correction mode. So what
yeah,
this means, again, guys, only in hindsight we're going to see the crazy damage. Let me put my measuring tool here. Only in hindsight we're going to say, oh, it went down 56%. It went down. I think here it was
yeah.
60. Only
I
in
thought
hindsight.
we could go to 50 or 60.
But
Your
look
red
what's happening.
line moving average there.
Yes, exactly. At least it's going to go and retag that. Here, that's the
Yeah.
bottom pane, guys. It's my distance from that red 36-month moving average. As soon as you had the momentum break here of that rising trend line, price went up a little bit, but then you're in correction mode. This is what I called and you probably also noticed that it's like it was FOMO here. FOMO, like everybody, AI,
Yeah.
insert
Yeah.
your favorite narrative. It was there, but the low risk entries, they're not there, guys. And look how much time this is going to need to unwind before you get a no low risk. So a correction is price and or time, right? It's about letting that moving average catch up. So it could either go violently down, which gets all the headline news, or it could just be a sideways grind, and and then you get a move upwards. But until you get a new breakout line, a new like until this is crossed above, it only has two touches so far. This thing could just deteriorate. Imagine if it, like in, I don't know, like let's say a worst case scenario, and we look, it could go down this before it resumes upwards. Who knows? And if you look at like at cannabis stocks and stuff like that, sometimes you never recuperate from this, right? Years later,
Never.
that could be the ultimate top. You
Yeah.
cannot assume it's always going to keep going up forever and ever and ever and ever. There's the SPX went sideways for 10 years. Look at the sideways grind there for the SPX there. Look at this, guys. Like people got to remember, look, SPX went sideways for 154 months. What is that? 10 years? Over 10 years, it went
Yeah.
sideways. Here in the 60s, it went pretty much sideways for
Yeah, it did.
137. And I don't want to, okay, here we're very far, but look here. Here it went sideways for 300 bars,
Yeah.
300 months. And
Yeah.
this happens over and over. So any one of these corrections could be, in fact, I don't want to scare you guys. It doesn't have to be, but that's what happens to
10
people who,
years.
yeah, why not for 3 years, 4 years? Who knows how long it could last, right? And I'm gonna these sections of going sideways 10 years. I'll show you when they generally happen there. This is where we tie it in with
With the
the
gold.
yes with pricing SPX and gold. Hold on, SPX divided by XAU USD. Okay, here. Okay, here it is. Put down a log scale.
Yeah.
So here, guys, I have this is gold versus SPX. And when you get these huge capital rotation events, like huge turnarounds,
Yeah.
it's mostly because gold is going, well, two things happen. Gold goes up and SPX goes down to initiate it. It goes in a 50% correction at the very least there. Right here, the SPX, even in the 70s, went down 45%, like two, three times. It was really nasty there. See, because always people think in binary Dell, oh, it's a big crash, it's a dot com, it's going to go down 90%, 80%. Well, sometimes you could have just like the 70s where it just goes, you get all these down 45% up, then down 45% up, and then down 30%, like just some grueling, all my lines got messed up there. Some grueling price action. But look at here what's happening to SPX price and gold, guys. It's
It was a
starting to turn
fatal
over.
rally.
It's turning over. And whenever this happens in a meaningful way, you cannot trust anymore. It's like the market participants thinking that this 3% correction in the or 5 or 10% or 15% correction in the SPX will not be the end of it. It will be something more nefarious if that continues to roll over. It's and look at this long-term line there. Well, it's not there yet. Okay, we're far. Is it mine lot sale? Yeah, that
Yeah.
one's far away there.
That looks like a failing rally from the 2000 high.
Yes, yes, it could be exactly. That's another way to see it. It's a here you had a bull run,
Yeah.
and then after that it tried to go up, and now it's just it cannot match its yeah.
90s.
Look,
Was that in
it's
the
halting around
90s?
here. There's a wall here. Resistance, a
Yeah.
whole bunch of congestion, support.
Right shoulder. It could be a
Yeah.
shoulder.
Oh goodness.
Be
It's
anything. Yeah.
at the very least, it's not bullish, right? It's not
Yeah.
whatever bullish momentum it had since 2010. It's halted, right? It's
Uh, it's a short to me.
well, yeah. Why not? Why not?
Wrong over those highs.
Look at that. Until you, if you cannot climb above this, if you cannot climb back above this, then even if SPX goes up in fiat denominated terms, you're still better to hold gold because gold
Right.
is outperforming the
So
SPX, right?
let's go to your wheelhouse. Let's talk a little bit about gold. So, gold reached a lot of long-term targets for some
Yes.
people, and they called it. Some people are calling it a wave five. I'm we're I'm thinking that I don't know what levels, but if this deleveraging takes some time, we're rallying here in gold. But I still think I'm looking to short this rally in gold. I was short Newmont last week. I think that we could pull back to maybe 26, 2,500 over into the summer. What do you think?
Yeah. Well, 2670 right now is a 12-month moving average. Uh,
Okay.
here's the distance from the 3-year moving average. Look how stretched we are. We've been
Yeah,
saying
real.
for a while there's no low risk entries for gold. And
Yeah.
if ever it loses this rising trend line on the distance from moving average, that means it's gasping for air. It can't go up as fast anymore. And look historically,
Uh,
whenever you've had these
oh, good
that
looking.
stretched, it
Yeah.
goes in the correction mode. Look, it went sideways
Right.
for a
Yeah.
year. Look at that. This was a GFC event. It actually went
Right.
corrected all the way down to the 3-year moving average. Here, well, that was a top, right? Sideways and then down.
Yeah. 11 for 9 years went
Yeah.
sideways.
So look,
Yeah.
look. So look where we are here. We even
But you
corrected that.
guys never let go of your conviction on this. And you had to deal with impatient followers. When's it going to happen? When's it going to happen?
Yeah.
Let me. Have you had a deafening amount of applause now that it finally happened? Do people at least acknowledge that your work uh, was foretelling a major shift in the market that manifested? Or because I will.
Well,
Okay, I will.
yeah. Thanks. We don't. I never. Sometimes I talk with Kevin and look. Look, that played out. But there's a whole bunch of stuff that some roadmaps that we do that never, they don't materialize. But we did get feedback there from our members that they were happy that they avoided all that
Yeah,
market turmoil. But
carnage.
this is the idea. When we see us, it's all about identifying low risk entries. And
Yeah,
even here, when we were stretched from the moving average, and even if price of gold, let's say we started telling our members, well, gold stretch at 2,800, 2,900, there's no low risk entry. Even if gold went up to 3,300, it still did not make it. It does not make you wrong to say that there was no low risk entries. So, if ever there's a correction that comes, that later on people say, "Ah, yes, cool." Um, you were right, but sometimes you could get stretch and more stretch and more
yeah,
stretch,
you
and
could.
but it doesn't make it wrong that you took profits. The idea is if people who want to hang on when it's stretched is because they did not enter low and at the proper breakout moment when it was look how I must have shown you this chart a million times. Look
Yeah,
how coiled and tight it was in June of 2019, breaking out. So if you buy here when it's stretched, you're not looking to enter. You're fine taking profits after you've run up from whatever 1300 all the way to 2000. Or if you bought here low coiled and tight, exploding,
yeah,
and if you bought wherever at 2000 and then you're stretched and you sell at 2,900. You,
Where do
you
your two moving averages come in? Oh, I see. 2460, 2670. And
2670. So if you think, yeah, it's highly probable there because look at that. It's there's probably some rising trend lines there. So that would
yeah,
probably be the first place to look at. Oh, it's so tight.
okay.
So that rising trend line, maybe. Then after that, you could go sideways, and yeah, if ever you lose that rising momentum here, then after that, it could be something really,
All
too.
right. I have to ask you something, and it's something that I brought up being a dollar bear last time I was on with you guys. And it's something that's a new regime change. Tell me if you agree with this statement. A weak dollar being risk on is dead.
Okay, risk on for U.S. assets, right?
Yeah.
Well, yeah, they don't.
Is it dead? No, I don't need. Is it alive or dead?
Is that
Or is it
narrative?
dead for a while and will rise from the ashes?
Oh, it's
I think it's dead. Overlay the dollar on the Qs.
That's right. Oh, IFSPX, is that okay?
All right. Yeah, that's okay.
Yeah. So here, and that's the thing is, look at all this data there. Goodness. Sometimes, look, U.S. equities. Look at that here. The U.S. dollar plummeted as the SPX kept going up. Here, you have both of them going up together. Crazy, right? One of the craziest runs we've ever had in stock market. The U.S. dollar was going alongside the um, the
Yeah.
stock market.
Oh, so yeah, so it changes.
It changes. Yeah,
But
yes,
I'm
it
saying
fluctuates.
now,
Yeah.
but
Uh,
I'm saying the new regime, because a lot of people kept getting wrong footed. They'd see the market getting hammered. They go, oh, I got to buy dollars. No, you got to buy euros now. That's why outside markets are outperforming the U.S.
yes.
I think they even held up better during this carnage.
Well,
So, that I hear is also a secular change from guys that have seen this before, Patrick, that
look.
uh, we went through all those years of outperformance compared to foreign markets. Now we've reversed. Okay, so is that the dollar and
Yeah, well, look,
the
it's crazy
S&P?
because
Yeah.
the dollar has been going up with everything since 2009. Look at that, it's been going up with the markets overall. So it's all about time frame, right? Because there's 100% uncorrelated, contradictory behavior in between both of those, the DXY and the markets. On the like on these, there's shorter cycles within that. But look, since 2009, even here, it's they've been going up together essentially. Crazy.
Huh. Well, that was U.S. dollar, I guess, exceptionalism.
Well,
So maybe we're going back to reverting to the 2000 trend.
yeah,
Um,
we'll see. It's
yeah.
hard to trade that. Like, as if I'm a trader and the correlation's not super high, it's giving me a clue that I'm not looking at the good correlation. It's like some people looking at the gold price and then they look at the silver price and then they say, well, how come silver's not at all-time highs like gold? And but
Well, okay, that's a good one. Has the gold silver ratio peaked up here at 110?
uh
Certainly surprised me when it started blowing off like that.
yes, I spotted that a while back there, and that's one of the clues, seriously, that we were starting to get worried that there was going to be some type of event because when there's a spike, it's like a 2020. Look, that's a GFC one. It didn't do it so much in the 2000. The 2000 was kind of a just a gradual gold outperforming silver, gradual crescendo, and then it went down. So we don't know yet. Look, we're gonna have to wait for the monthly close. Remember, you want to remove that noise,
Yeah.
guys. Tariffs one day, no tariffs the other day. This. It's all nonsense.
It looks a lot like the dollar did. If you put a same time frame dollar, a
Yes,
monthly,
yes.
it's
The
the
D,
same thing. The
yeah,
dollar had that one more pop up there.
yeah. The
Look at
U.S.
that.
dollar tracks a lot the gold silver ratio. Not always, but the ebbs and flows of it. Here, I'm just going to move it up and down. Look at that. Look here. Look in 2008. Look how it tracked. So
Yeah.
essentially, what it's telling you is when people selling off U.S. equities risk off, even if the short term yields are going down and there's downwards pressure for the U.S. dollar versus other currencies, there's so much selling off in the US markets that people are holding dollars instead of anything else. And the US dollar shoots up relative gain strength. And when gold to silver ratio spikes up, it's silver is like a risk off. It's like a risk sensitive metal, whatever industrial, whatever you label you want to put it. And gold holds its value better. So when you have the ratio of gold to silver going up, essentially gold might be going down, but silver is going down more, and that's risk off. And look at that here; it's almost perfect
Yeah.
correlation. And look, it happened here in the 2000 in the
Right.
March Madness, and it happened here again. So
Yeah.
now you have a contradiction here. The GSR is telling you that the DXY should be going up, or the
Yeah.
DXY is telling you that
This is peaking.
this is peaking. Exactly. So you got to look
Yeah.
at both. You got to look at both right now.
Yeah.
Look at that. But the DXY is
I'm with
not.
this peaking. I say take that 110 pieces of silver. But I said the same at 94.
Well,
Anyway, uh,
yeah.
I'm always early, Patrick. If I'm on time, I feel late. Uh,
You played it too
anyway,
close, right?
anyway, what's the best way for people to see
Oh,
you and Kevin, keep up with your work, become a subscriber, the
sure.
whole matzo ball?
Yeah, well, guys, you could go on the Bad Charts One there on Twitter, and you could follow. There's a whole bunch of good stuff in there. And if you want the the in-depth analysis and all that, and we answer your questions, we do your chart requests and all that. Well, it's on northstarbadcharts.com. Of course, paid membership, but
Yeah,
it's
it's very reasonable. That
yeah,
is.
I think it's the best value in the industry, but you know,
Well, you're objective. Why can't you express your objective opinion? Anyway, I think they're very good.
thanks,
And
Dale.
um, it was great talking to you. I'm glad I didn't miss you this time, Patrick.
Goodness, so fast. Time flies
Yeah,
by so fast. You said
yeah,
it's I looked at my calendar, I said it's already been 3 months since the last time. It's
yeah,
crazy.
yeah. Well, money comes and goes. Time is gone forever.
Oh my
Make it
goodness.
count. Make it count, bro.
That's right.
And that's coming from an old man. So
Nice.
have a great quarter, Patrick.
Thank you, sir.
Keep guiding people and find your opportunities and keep drawing your lines, bro.
Thanks, Dale.
All right, Patrick Kareem. Follow Patrick on X at Bad Charts One, and they do some great technical work. And a lot of people follow them. They get lots of what they call it, interaction or engagement on what they put out. So everyone have a great day. Remember, don't just count your shares or your coins or your ratios. Count your blessings. Have a great turnaround Tuesday. And I will see all you guys tomorrow. You could join the team on the morning edge. Thanks once again, my trading warrior brother. Talk to you soon, Patrick.
Take care. Bye, Dale.
All right, that's a wrap, everyone. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.